Breaking. The last time Bitcoin did this, it caused a huge crash. Take a look. This is the stochastic RSI. We're going to go through the entire history of Bitcoin. We can see that this line just crashed through this white line for the second time this cycle. This is ridiculously powerful. Take a look. Every single cycle, we've had exactly and precisely 2 cross-throughs. On the second cross-through, it marked the market cycle top. Take a look. 2011, we had our first cross-through. Second one, market cycle top. Next cycle, first time cross-through. Second one, market cycle top. Next cycle, first down cross-through. Second one, market cycle top. Next cycle, first time cross-down. Second time, market cycle top. 2021. Now here we are. First time cross-through, and second time, you know the rest. And the main question we're going to answer today, we're going to go through the facts, and I'm going to tell you, can this be avoided, or is it too late? Welcome. I'm Steve. Here we deliver honest, sponsorship-free TA with genuine value. Subscribe for a no BS approach that actually helps you. Subscribe. Let's get into it. We're on the Bitcoin US dollar index, and today we're on the 2-week chart. And what we have in front of us is price action above and stochastic RSI down below. Stochastic RSI is our momentum. It's on the range of 0 to 100, 100 being incredibly overextended in terms of our momentum, meaning there's no more momentum left for prices to go up, and 0 being the exact opposite. You'll notice that when we get near this 100 level, we don't have any momentum, and there's generally a big crash in price to regain our momentum. What you'll see happening time and time again is we cannot spend too long at the 100 level of our momentum. It's just not possible for price to keep going up. The same is true at the bottom of our scale. At that 0 scale, you'll often find every single bear market hangs out there, right? We don't hang out at the 0 level for years on end. We're there in a short period of time, and those are the best times to buy. Right? Now that we understand the stochastic RSI, we get that it's momentum. We understand the 0, we understand the 100. Now let's talk about these cross downs. What we have on the chart is this line right here at about 67. Right? If you get the 2-week chart and you put on the stochastic RSI and you put a white line at 67, you're going to notice something very particular. What you'll notice is that 2 times in every single cycle, we cross through said line, that 67 line, right? Exactly 2 times. And the second time is always marking the market cycle top. Why is that important? Well, we just had our first cross down in August of 2023. Inside this cycle, and we just had our second one hot off the press. What we want to talk about and we want to determine is, hey, can this be avoided, right? This is saying like, hey, we're at a market cycle top. It's done that every single time in history. So the $1 million question is, can we even avoid this? Is it even possible? Let's go back in time. Let's start our journey in 2011, and let's start to break this down with more facts and start to understand the situation better. Once we understand it better, we'll be able to determine, is it even possible to avoid the inevitable? Let's discuss. 2011, the glory days of Bitcoin. We had our first cross down back in 2010. We came back down here, we regained our momentum, right? We had a reset of our momentum, and that's what helped that parabolic run up to the top of the glory days of about a $30 Bitcoin, right? And then we had it crash after that $30 Bitcoin back through here. In other words, it was our second time crossing said white line. And we started our journey of every single cycle in the future doing precisely the same. We fast forward to the next cycle, right? We had the bottom of the market. We started in this bull run. We crossed above here. We came all the way into this phase 1, phase 2 here. We crashed back down. We went back up, and we had our first cross of said white line back in May 2013. That was the point where people thought this could be the top, but it wasn't actually the top. That was the first time we had crossed through. Again, tilt your phone to the side and subscribe. 2 times in every single cycle. So you fast forward, we had a big correction of our momentum, right? A huge falling out of momentum, which is needed when you have that much of a parabolic rise. It's beautiful to reset your momentum because we came through and had our last blow off top, and then we crashed down again back through the line for the second time. This was January 2014, and once we crashed down through, it had the market cycle top to the T, just like it did in 2011. You look at that 2011 cross, right at the market cycle top. You look at this January 2014 cross, right at the market cycle top, precisely the second one. And then we continue into the next cycle. The next cycle was a little bit messy, but again, we needed to really regain our momentum. At this stage, we had double bottom, so we can't count this one crossing back down through. It was literally at the market cycle bottom, right? We were talking about happening 2 times in a bull run, not in a bear market. Bear market is irrelevant for this conversation. It's all about the bull run. We started our bull run. This is phase 1 here. So we really had one cross down only during that part of the cycle, and that was July 2016. That was our first cross down of the 2016 bull market. Once we crossed down, we regained our momentum. It's precisely what the market ordered. It's what the market needed. We needed to really take a breath, start to build some structure. And when we came back above this line, that's when the market really started to take off and go absolutely parabolic, right? And what you can see is that we had our second time in January 18, precisely at the market cycle top. So we were 3 for 3. We had our 2011, precisely 2. We had our 2014, precisely 2. And now we're in that 2018 cycle, and we had exactly 2 cross downs through the white line of the stochastic RSI. We are on a roll. We were 3 for 3, and we moved into our next cycle. We obviously had our market cycle bottom here. We started going parabolic. We got back above this white line, and we crossed back down through after our 14K top. Our 14K top was far too parabolic. We forgot to build any market structure. It was ridiculously unhealthy. And those of you who follow my channel back there, we had a gravestone doji at the top of here on the weekly chart, which we called out. We called that top at 14K, not knowing this pattern that plays out every single time. At that 14K top, the market needed a reset. We actually double bottomed. It was during the COVID period, which was very, very healthy. And we came back out and rocked back above this white line, and we went absolutely parabolic after that. And then we broke down again. We broke down again at our first top. A lot of people are like, well, isn't this the top? No. This is technically considered our first top, and this is technically considered our double top. Some people will say, hey, didn't this one go a little bit higher? Yes, double tops don't need to be exactly the same price. They could be a little bit above, a little bit below. When they're in a range, it's considered, technically speaking, a double top, right? So we had our first top, and at that actual top, that's when we crossed back down here, when everyone still thought we were going to 100K. They were convinced. They said, you know what? Next week, 100K. We had a cross down. We came back down through, and we reset our momentum, but we just couldn't regain that line. Why? Well, it's probably because we can only regain it 2 times. And once we lose it the second time, we're done. That's happened now 4 for 4, right? We were 3 for 3, and we just proved it again in this cycle. It's 4 for 4. So now we move on to the next cycle. And again, that's why this was a failed rally. We talk about a failed rally a lot. We talked about it in our previous video. Bitcoin is on the verge of proving that this is or isn't a failed rally as we speak. More on that later. But as we got back into it, this was a failed rally. We just couldn't regain that white line, hence the double top, hence the divergence. Look, price went high, higher high, indicator went high, lower high. You've got divergence across the board. You have divergence in every time frame. All of it was bearish and a double top. It was ridiculously bearish, and we subsequently plummeted from there, moving into our next market cycle. At this stage of the game, we were 4 for 4, having exactly and precisely 2 times crossing below with our stochastic RSI at a level below 67. Again, marking the absolute top of the market. And we moved into our next cycle, right? We had incredibly strong bearish divergence here. Everything was looking great. Everyone said 2023 was going to be a bloodbath. They said, don't invest in any crypto. Don't invest in any stocks. You've got to be out of your mind to do that. All of the world's top economists were screaming, and we were the idiots on the other side of the fence saying, hey, you should buy Bitcoin at 15,000, at 16,000, and at 17,000. Don't listen to everybody. Trust the charts. Men lie, women lie. The charts don't lie. And the charts won again. There was incredibly strong bullish divergence, and we went absolutely. Tilt your phone to the side and subscribe. Absolutely parabolic in 2023, even though they told us every world's top economists all across the countries were all screaming the same thing, bloodbath 2023. Well, the exact opposite happened, right? So we ended up going crazy high through here and started that parabolic phase 1 that dragged us out of this bear market and into a bull market. And then we had our first crash already in phase 1. When we had that crash in phase 1, we had a reset of our momentum. Keep in mind, you need that to really go parabolic. You have to have a reset of your momentum, and that's what we did. We came back down. We built some beautiful market structure, holding some resistance during the bottom of the market and holding support during that retest here that we needed to really, really reset our momentum, and held beautiful structure to a T, came back above, and we went absolutely parabolic after that. However, we just had our second cross down through. We made it up to a price of over 73,000. You guys already know when we got up to 73,000 and change, everybody was crazy. They were literally salivating for 100K Bitcoin happening any moment, any day. They were really convinced of it. We put out a video. We don't even need to roll the clip. We put out a video saying that there was a surprise correction coming and that people were going to be taken off guard. We also said that you should buy Bitcoin at 58, 59, and 60K. Luckily, you got 5 weeks to really buy at 58, 59, 60K. But again, since that happened, we struggled to get back above 73,000. We called that out 3 months ago. Since then, we've never touched 73. We didn't even get close. And we had this cross down. So again, 4 for 4 so far in every cycle. We had the 2011 cycle. We had the 2014 cycle. We had the 2018 cycle. We had the 21 cycle. And this cycle we're in now, precisely 2 times, crossing down through. So far in history, the second cross down through simply means the market has topped. So this video is all about, hey, can this be avoided? Well, let's dig into it further, because we had this first cross down in phase 1 of this current cycle. What are the other cycles telling us about this first cross down? Are we even in the right game where hey, did this first cross down before happen in like phase 3 or 4? Or was it similar in phase 1 like it was here? Let's take a look. Well, we had this cross down right here in phase 1. So phase 1 here with that first, phase 1 here in our current cycle with the first. Let's look at the prior one. Right here was our first cross down, and this also happened at the start of phase 2. So very early in the bull run for both of those so far. This was our first cross down in this cycle, but this is phase 1, this is phase 2, and this is phase 3. So a little bit later in the bull run, right? And this one was literally in phase 2. So what does this mean? Well, usually we get the first cross down in the early stages of the bull. Once in a while, we'll get it in the later stages. Well, the second one, we already know. We don't even need to really look at all the data. All of it is screaming. The second one only happens at the market cycle top. However, we do have some things on our side. Number one, well, the main question today is, can this be avoided? And number one is, I study a lot of charts. I study them religiously, 7 days a week, probably religiously about 70-ish charts. I do have several hundred, but 70 are like my core go-to. And what I've noticed about those 70, I have about 8-ish charts that are ridiculously good at predicting our market cycle top. Luckily for us, those are not signaling yet. This is one that I find fascinating. I showed you the proof. It's right in front of you. But can this be avoided is the question. And the answer really, it really goes into this type of structure we saw back in this 2015, 2016, and 2017 run-up to our top. What we saw happening here is a little bit of inconsistency as we continued through the latter part of that bull run, right? Specifically speaking, structurally, right? This structure we respected the hell out of, right? You look back to February 16, holding support. We broke it here in July 16. Then we came down through, reset our momentum, gathering our steam, and then we held that exact zone as resistance, not once, but twice through this January, February, March area of that early 2017 run. Then we broke above, but it was a little bit messy. We had a dip, a little bit of a dip here and a little bit of a dip here, breaking said structure. So, are we overly concerned? Can this be avoided, that this could be the top? My answer is yes. What we have in front of us are clear-cut signs that this has the possibility to be a top, although the charts outside of this one, if you look at the totality of the charts that I study, there's no confluence yet that we are at a market cycle top. There is confluence that we are potentially at an interim top for potentially months on end, and then we'll reach that second wave of the market to push us much higher. That is what I'm seeing right now. So the answer is yes, this can be avoided, although this is incredibly concerning, and we've got to keep our eye on whether or not Bitcoin can continue this rally and prove the 2-month candle wrong. That is to be determined. This bull run is our road to 500,000 subscribers, but I need your help. Today, tell one person about our YouTube channel, how we spit facts, go against the herd, take no paid sponsorships of any kind. Road to 500,000, let's go.